Thank you very much for staying with us. Nigeria recorded an investment proposal worth $23.3 billion in 2021, which is about 39% higher than the $16.74 billion investment announcements made in 2020. This is indicative that the country's investment climate is becoming adaptive to the global new normal after the economic disruptions occasioned by the restriction imposed to check the spread of COVID-19 pandemic. The NIPC says this also indicates the growing confidence of investors in the efforts to improve the national investment landscape. Lagos was leading the states with the highest investments, while the manufacturing sector had the highest number of projects with $10.5 billion, representing 45% of the total inflow. Well, let's discuss this. Joining me now to look at this is a senior manager, tax and regulatory services at Deloitte, Ibirunke Oriono. It's good to see you, Ibirunke. Good afternoon.
Hi, good afternoon.
Yes, yeah, thank you so much. Your first time on the show. We appreciate this. What could be responsible for the 39% increase in investment proposals for Nigeria? Well, at this time.
Okay. Thank you very much for having me on the show. And I'll go back to your question that you just asked. What could be responsible for the increase in the investment in Nigeria? I think first and foremost, we all know what happened in 2020. The COVID really had impacts on the economy all over the world, and Nigeria is not exempted. And what we can see that there's a rebound post 2020. Everybody's becoming getting used to what post-COVID era should be. People are getting normalized with what the whole environment is now. And I would say yes, so post-COVID is having impact on the increase in the proposed investment plan in Nigeria. And two major factors that really works for us in Nigeria, of course, we know that Nigeria has a large market size, being the largest economy in Africa. Most investors will want to come into Nigeria to have a fair share of what investment is, and most of them want to come in. Secondly, due to our population, we know Nigeria has a population of over 200 million, and any investor will want to come into such economy to see what they can get or maximize from such opportunities. I would say those two major factors are market size, the population, and the post-COVID effect. Yes, so you see that proud in 2020, the proposed investment was about $16.7 billion, while the proposed investment for 2020 had increased to 2021, pardon, had increased to about 23 billion. So you see that the increase from 2020 to 2021, which is a 39% increase, we spoke about, is as a result of yes, investors are beginning to come back or accept the new normal of what the environment should be post-COVID. And proud to 2020, Nigerian investment proposed plan used to be was about 30 billion. That's in 2019. So we see that the drop in 2019 to 2020 was as a result of COVID, and now there's a rebound, and the economies are beginning to peak and recover from the COVID effect.
So does this mean that investors' confidence is gradually returning or has returned following the effects of COVID and all of that?
I would say not exactly that the investors' confidence have fully restored back, right, in the Nigerian economy. And three factors I'll just talk about three factors that could be responsible for the still lack of investors' confidence in the Nigerian economy. First and foremost is we all know what the burning issue is in terms of our foreign exchange regime, that we still have a huge gap between what the official market rate is and what the parallel market is, and also the control by the Central Bank of Nigeria to control the demand made by companies there. Yes, if you need so much of this dollars, but you can't get more than this, and then giving it to some certain sectors. So there's still a lot of things going on in terms of our foreign exchange policy that has not made investors confidence fully restored. If you look at what our exchange rate was in 2018 compared to what we have now in 2022, where the dollar to naira is about over 400 naira compared to where we are coming in 2018, which was about 180 naira thereabout. You can see that there has been major increase in our forex, in our naira to dollar. Dollar has really, naira to dollar, you can see that our naira has really depreciated, and that's giving investors some form of worry to say, should I bring in my money into Nigeria? Another major challenge is insecurity. You look at what is happening across the country, there's increase in banditry, there's increase in kidnapping, which we used to have so much of that before. And any investor that wants to come in would, of course, have to take a second look at, can I come in into an environment that I feel still has large insecurity issues? So all those things are putting investors, giving them the second thought that should I really come in. And the third factor I would like to talk about is our political risk. Yes, election, we all know election is coming up next year, and no investor wants to really come in or put in a lot of money now because they're uncertain as to what will be the political terrain next year. So there's a lot of caution on the side of investors to say, let me watch before I put in my money. And I would just like to say quickly, yes, it's good to look at, yes, we've had about 39% increase in investment proposal. But what we should ask ourselves, what over the years, what has been the actual conversion rate from these proposals to what our actual investment numbers are? If you look at 2021, for instance, our quarter one and our quarter two, the actual investment so far has been about 230 million dollars, with a projection to end 2021 of about $1 billion. Now, the investment proposal for 2021 is about $23 billion. So if you look at that, what's the ratio of our actual conversion from investment proposals to what our actual investment is? And secondly, I think for us as a country, what we need to look at is how can we make instill investors' confidence or restore? Because what we have right now, we are at about $2.23 billion, and that $23 billion as proposed, right? And we have actual of projection of about $1 billion for 2021. This is still way low compared to where we were in 2008, where we had about $8 billion actual investment, foreign direct investments into Nigeria. So we need to, yes, there's been an increase in the proposed investment, but it's not something we should be so happy about, because the conversion rate to actual investment is actually low. So more of what we should concern ourselves with is how do we ensure that, yes, these people that come to prospect into Nigeria actually bring in this money into the economy.
Okay, let me ask you, my next question will be a two-in-one question. Now, Lagos topped the 36 states in Nigeria and FCT by the value of investment of about $8.7 billion, followed by Bayelsa, Delta. We can go on and on. What can be done to make these subnationals perform better and attract more investments? And I would like to follow up with the fact that what can we also do with regards to our trade policies and all of that, incentives to attract more investments into the economic space?
Okay. So thank you very much for that question. So if you look at the report that has been released, yes, Lagos has about over $8 billion investments, followed by Bayelsa. And the question we would ask ourselves is that how can we ensure that other states, even in the other states in the country, also tend to increase their investment in attract investors into their own states? And one major thing is, I'll still go back to it, security. If a state is not considered safe, no investor will want to go to such states. So first and foremost, I think for states to be able to encourage investors to invest in their states, we need to fix our security issues. We need to try to ensure that our states, whatever state investors want to attract investors to, is quite safe for them. And also, what we can also look at is infrastructural development in the states. We'll see that Lagos State is doing quite a lot in terms of infrastructure development. One is the rail line being constructed, which is still ongoing. It hasn't been completed, but by the time that is completed, that would also help Lagos State in terms of how people can commute, how goods can move from one end to the other. So infrastructure development in states is also very paramount. And one thing for us in Nigeria, the way we are presently structured right now, a lot of powers reside with the at the central level. So states, yes, they don't have so much powers in terms of increasing, in terms of their own revenue generation, yes, because a lot of them still depend, a lot of the states still depend on the allocation from the federal. But that notwithstanding, like I said, the states should improve on their security, improve the infrastructure, provide incentives that can encourage investors to come. They could also consider designating some areas as free trade areas, depending on what each state's resources are. And one major thing for states is they need to harness their resources also better. We don't have to depend, not all states have mineral resources. Take Bauchi, for instance. Bauchi, there used to be, there is now Carry Games Reserve there. How well are we mining our tourism opportunity in this state? In Bauchi, for instance, how well are they mining their tourist attraction? We used to have Yankari Games Reserve a lot when I was growing up, but now they need to also look into it. How can they also revamp that tourist attraction site to bring in more revenue to their state?
All right,
So
before I let,
that's one thing.
okay, make your point. Make your point.
No, go on, Tolu.
All right, then. Thank you very much for that. Now, before I let you go, manufacturing sector also has the highest number of projects, $10.5 billion. That's about 45% of the total inflows. Now, my question is out of that. I'm just looking at the manufacturing sector in its entirety as we prepare for the benefits of the AFCFTA. Are we really ready?
That's a good question, Tolu. Are we really ready for the AFCFTA? Are we really ready for that in terms of, and I'll take the manufacturing sector, like you said. Two major things we need to really worry ourselves about. For you to compete effectively in the free trade in this free trade area, what do we need to do? The AFCTFA is to encourage people, to the movement of goods across different countries that signed up to this agreement. But for us in Nigeria, for manufacturing sector, for us to compete effectively, we need to look at the cost of our products and the quality of our products. We can't, and for manufacturing sectors in Nigeria, we are asking, are we ready? In my own opinion, I don't think we are fully ready to maximize the benefits yet until some major things are fixed. And some of the major factors we need to fix for our manufacturing sector to be competitive in this in the AFCTFA, first and foremost, our infrastructure development. We need to fix that to be able to use for manufacturing sector to be able to enjoy the maximum benefit. And also access to our ports. We all know what the port situation is in Nigeria. It's something that, yes, if we want manufacturing sectors in Nigeria to play, to compete with other manufacturing sectors in other countries, then we need to look at how to operate our ports more effectively and efficiently, which can help to reduce the cost of production for our manufacturing sector in Nigeria. Another major thing that we need to the manufacturing sector needs to fix, or the government needs to help them with also, is power supply. Power supply is a major issue for the manufacturing sector. Most of them have had to, incur money or incur expenditure, a lot of expenditure in generating their own power. And this in turn affects the price of goods. And lastly, what I would like to talk about is credit availability. The manufacturing sectors, at what rate are they able to access loans from the bank? All these factors affect the pricing of products. And for them to maximize the benefits of the AFCTFA, all these factors needs to be put in place so that our prices for the goods produced by the manufacturing sector would be attractive and will be able to compete with products coming in from other countries, so that we can enjoy the maximum benefits and manufacturing sectors in Nigeria will not be outplayed in this in the agreement.
I must thank you so much for your time, Ibirunke Orionu. She's the Senior Manager, Tax and Regulatory Service at Deloitte. Thank you so much. We hope to have you join the show anytime soon.
Thank you so much.